So thank you, John, for being with me. You are with Guaranteed Rate, and we
Mhm.
depend on you for a lot of really good information. And I thought today we could have a Zoom call about some of those things that people are afraid of when they do think about applying for a mortgage or getting a mortgage. So I'm going to ask you some tough questions, some of the things that
Okay.
some of my clients ask me. And then obviously I want to know what's going on in the market right now and how can we help people who may be on the fence about buying a home.
Sure.
So first of all, tell me why you love doing what you do.
Yeah, I mean, what I love about it is one thing, each day is unique. Every person I deal with, their situation is unique. So I love the kind of problem solving aspect of it. And I love helping people, as cliche as it sounds, realize the American dream. I mean, nothing makes me happier than, especially with a first time home buyer who's, starting a family, getting them in their first house, or if it's a refinance to save somebody some money. So it feels good to help people. That's what it is.
So in these challenging times, are you seeing people who are afraid to apply for a mortgage right now because they're not sure what's going on in the market? And what would you tell somebody who's saying, I'm thinking about having, having that American dream and getting a mortgage, but I'm not sure what I should do right now? What do you tell people?
Yeah, so I think it's a great question, Jillian. And like with most things, there's information overload. And I think people kind of get pulled down by that. And there's a lot of bad information out there. So if somebody's thinking about this, I tell everybody the same thing. Listen, if you're thinking about purchasing or refinancing, I don't care if it's the next 90 or 120 days or next year, talk to a mortgage professional first. Get the facts from somebody who does this day in and day out. Find out what your options truly are. Get good information from a reliable source, because there's so much information out there that is deceptive. Sounds like too strong of a word, but we all get bombarded with internet ads of this and that, and somewhere, it's not all truth. So talk to a professional, get the right information.
Now, I know there are a lot of online companies that offer mortgages, and people are not afraid to apply online because there's not someone, judging them or, worrying about their credit score. But can you tell me, I know one of the pitfalls for some of my clients has been that there have been hidden fees or things are not what they seem. When we would work with someone like you and Guaranteed Rate, can you disclose all those fees? How do you handle that?
Yeah, great question. So what I typically see when people come to me after they've spoken with or been through an online lending portal is they're always talking about rate. And we have been conditioned as Americans, rate, rate, rate. You see car commercials, 0%, credit cards, whatever it is, it's always rate, rate, rate. So the online lenders like to flash up these really, low rates. And what they're not telling people, and what people typically find out after they've been down the process a little bit, is, oh, that rate costs me money. So when I talk to these folks, I always price everybody at what's called par, meaning it doesn't cost them anything. And then as we proceed, I said, listen, and if you would like to buy your rate down, and I walk them through what points are, talk about the cost, talk about how much it saves them each month, how long is it going to take them to recover that upfront cost. I just educate them. It doesn't, it doesn't benefit me financially if they buy points or price at par. I'm trying to find out what the best process and what the best pricing is for them. And then, yes, they always get a loan summary and a loan estimate that breaks down all of our pricing. We have a flat rate for doing loans, which is $12.90. Doesn't matter what the loan amount is, doesn't matter what the loan product is, with the exception of VA loans, which we do for free as a small piece of gratitude for our vets and their service.
That's
So yeah, it's important to go over those with people. And I think that's one of the challenges with online, is because they just see this really outrageous rate. And then lo and behold, they're like, hey, why are my closing costs, several $1,000s? Oh, there's points involved. And they don't find that out until it's too late.
Yeah. And I would say this, and I want to caution people as they get into relationships with these online people and they feel like, well, I can't not have that loan go through because I started with this person. And they don't realize that that relationship might cost them $30,000 more than they thought it would over the life of a loan. And so I really challenge people to shop around, but also to make sure that before you get committed, you know that what the long-term effects of that commitment are. And what I like about working with you is that you work with a lot of my clients who may or may not choose to work with you on a loan process, because you seem to feel like the information is very important, and then the relationship is built from the information. So I really appreciate that about what you're doing. Let me ask you a question. People are always worried about their credit score. Somehow their credit score is somehow a reflection of who they are. And a
Right.
lot of times, people get into medical debt that causes problems.
Sure.
Sometimes there's some bad, some one or two bad choices. Maybe it's even just a relationship that went sour and you ended up with a bad debt. So how do you, what do you tell people about their credit scores and how you handle working with those?
So, I need to disclose I am not an official credit counselor. There are credit counselors. So if I have somebody that comes to me who needs credit repair, I typically send them to On-Track Credit Counseling here in Asheville. They're really, really good. But if people have general questions, there's a lot of bad information out there. Credit Karma, CreditWise, a lot of those places that are monitoring services are great for somebody to monitor their credit, but they're also typically not the scores that we see from a mortgage pull. So a mortgage is a full pull. People always ask me, is this going to affect my credit? It depends on where your credit score is. If you have a healthy credit score, you probably won't see very much effect at all for a single credit pull. If you have a score that's been hurt by the things that you just mentioned, yeah, you might see more of an impact from that credit pull. But we're also allowed as Americans to have multiple credit pulls for a mortgage product within 30 days so that people can shop around. And that's typically a misnomer. Oh, I don't want my credit pulled again. Well, don't have your credit pulled, for a Toyota, a Ford, a mortgage, and then a new Best Buy card. That will absolutely ding. But if you're shopping around between me and other mortgage lenders, you're allowed to do that within, 30 days and not take that hit. And typically, I just walk people through their credit. Sadly, I'm usually the first person that alerts them that stuff's on there because as Americans, we don't monitor it that much. And it's really easy for, like you said, medical collections to sneak a collection onto somebody's credit. And if they've moved addresses, they have no idea until they talk to me. And they're like, what? That's on there? Yes. And here's what we need to do to get it cleaned up.
And that's one of the benefits of thinking about a home and starting with someone like you is calling you and saying, okay, what do I need to do to repair some of these things in order to, or am I at risk, or how many days? So if I pulled a Best Buy card and I have a 700 score, how long should I wait before I think about a mortgage? Or should I go ahead and call you and say, I'm thinking about getting a mortgage. What do I need to do?
So yeah, it's one of those things where it's very difficult without me looking at credit. Unless somebody has gone and done their free credit report, which we are entitled to. It's a little bit of a process, but you can go online and get a free credit report from all three bureaus, like a full credit report, not a Credit Karma monitoring report. You can do that once every 12 months. If somebody hasn't had that, very difficult for me to say what they need to do without looking at it. So, I can run scenarios if people have a good sense of where their credit is, if they've been using a monitoring service, I can run scenarios and we can talk about things and we can look at pricing, but I can't move to a true pre-qualification if those folks are seriously interested and I'm going to send them back to you as a realtor. I can't do a pre-qualification for them unless I've actually pulled their credit and reviewed it.
Okay, so people need to know that when they talk to you or any lender, in fact, that in order to get pre-qualified, they're going to have a credit pull.
That's correct.
And so we can't, and what I like again about working with you is you have a lot of information on how people can be prepared for a mortgage and what they need to do to apply and what kinds of, there's a lot of paperwork involved. So for all those people out there that are afraid of having to pull this or pull that, what are the top 5 documents or what are the documents people should have easy access to in order to get that to you?
Sure. So if somebody is self-employed, I would say minimum 1 year of their personal taxes, and if they're a corporation, their 1120s, their K1s, or their 1099ers, or whatever's appropriate, or their scheduled taxes. Sometimes it's 2 years. For your W-2 employees, I would say minimum your last year's W-2 and some recent pay stubs that reflect your year-to-date earnings, so we can see that your earnings aren't decreasing year over year. If you are retired and blessed with a pension or Social Security or things of that nature, those what are called award letters, the letters that you get at the beginning of the year that says, Dear Jolene, for 2020, you're going to receive X dollars a month. It's basically all the documentation that we would use to be able to support their income claims.
Okay, so that's important. So tax returns, pay stubs. And then they should pull that free credit report. Let's just say today that if you're watching this and you haven't gotten your free credit report, you should probably pull that. And then kind of give me an idea what is, I know the credit scores are all over the place as far as how people can lend, and you can't commit to a number, of course,
Right.
until you can verify it. But I understand that right now banks are saying we're not lending if you don't have a 700 score and 20% down. How's that?
So let's talk about that, because that I've been hearing that a lot. And so for the record, it's one bank.
Okay.
Chase said that.
Okay.
Now Chase is a big bank, and they are a big warehouse line. But that's some of the information that kind of gets blown out of proportion on the internet. So that's not true. Yes, if you walked into a Chase branch and wanted a loan with them right now, you'd need a 700 credit score and 20% down. That's just Chase. We start at 620. You can do 3% down. You can do USDA with 0% down. If you're a vet, you can do 0% down. You can do FHA with 3.5% down with a 620 credit score. So there are still plenty of loans for folks that don't have perfect credit or don't have a lot of down payment. But I'm really glad you brought that up, because I've been fielding a lot of calls about that, because this information just explodes on the internet and all of a sudden it becomes this massive truth when it's really not.
Absolutely. And I think that's why we're doing this call and hopefully educating our community about people. There's some myth about who can afford a home.
Right.
And
Yeah,
I think
true.
in this life, anybody can afford a home if they have prepared properly and they have the right plan financially. And they don't need all that in place before they start the mortgage process, because that's obviously where you're going to get some guidelines on your own personal experience. So I appreciate that. Let me ask you a question. Why are you different? I think people aren't sure always the difference between a mortgage lender and a bank. And, and,
Sure.
and what I like about what you do is important. So tell us why you're different.
Yeah. So as there are two types of mortgage folks. There are folks that belong to a lending institution, i.e. a bank, and then there are non-lending institutions, which are commonly called brokers. So I am a mortgage broker. I work for Guaranteed Rate Home Mortgage. We are a direct lender to Freddie, Fannie, and all the government loans. And what that means that makes us different is we don't put overlays on top of their guidelines. So if you were to Google what are the Freddie Mac guidelines for down payment or the Fannie Mae guidelines for whatever the case may be, that's what we underwrite to. Because we've got such a relationship with Freddie and Fannie, we just underwrite to their guidelines. So I used to work for a large lending institution. And for instance, FHA loans used to start at 580. Well, that lending institution said, no, we want our borrowers to have a 640 credit. So they put a conservative overlay on top of the FHA guidelines. And they could do that because they were a bank and they were a large bank. With us, all we do are mortgages.
Right.
And we fund those mortgages. When we close those mortgages, we fund those with our own money, and then we sell those mortgages on the open market. So we don't service the mortgages.
Right.
We fund them with our own money, and then they get sold. But it makes our processes more efficient because we just do mortgages. That's all we do. We don't have checking accounts. We don't do car loans. This is all we do. And so we've built our entire platform, all of our technology around how do we help folks navigate the mortgage system. And quite honestly, we're really, really good at it. We're really efficient at it. We've got a lot of digital tools, a lot of ways people can navigate this process as easily as possible.
And what's great about that is you can offer them ideas and options for other products. So USDA, a lot of people don't understand that there's a map that a house
Right.
has to fall into
Yeah,
and
the eligibility
qualify
map.
for. And so you can give them a lot more information about all those other products that are out there and partner them up with the right product for themselves, where and we have to remind people that the goal of lending is to protect the investment. So anytime a lending institution is lending money, their main reason for lending it is that they're going to get it back. And so
Right.
they're putting in safeguards to ensure that they're going to get it back.
That's right.
Now, because they're so large, they have to put in more stricter. I think sometimes it feels like that. But in fact, you have access to a lot more products. You can also cross state line. I mean, Guaranteed Rate
Yeah.
can help people anywhere. So if someone's
That's
moving
correct.
from Asheville to another market, they can call you and get ready for that next market
Right.
after. So even if you're in the process of selling your home, you could be planning for the mortgage
Right.
on your next home. Is that correct?
Yeah, no, that's absolutely correct. And I think you touch on a really valid point. When I was with the bank, I could only offer what the bank decided they were going to offer. With Guaranteed Rate, I have access to really any loan that's out there. Sorry about my phone. So if somebody doesn't necessarily fit into one box, I can look at 4 or 5 other boxes and say, okay, well, this might not be the best product for you. Let's look at this, this, and this. And because I have so many options, it's very rare that I have to say to somebody, I'm sorry, I can't help you. And when I was at the bank, that's one of the reasons I left. If they didn't fit neatly into the bank box, I felt like I was saying, I'm sorry, I can't help you a lot. And I got really frustrated with that. So this has opened up basically all the possibilities that are out there. I have access to those for my customers.
That's awesome. And I have to say, for the record, whoever that phone call was, they're probably disappointed because you almost always answer your phone for me. And if you don't answer your phone, you send me a text and let me know how quickly you're going to call me back. So I appreciate that about you.
Yep.
And I think that's one of the personal aspects of why I like and have relationships with people who do what you do, like you. And I appreciate what you're doing and having this time with me, is that you really want to have that connection with your client to walk them through, because unlike a lot of other things, credit somehow makes people feel like they've done something wrong. And,
Right.
you know, I want to say nothing is not, we say it's not figure outable. Everything is figure outable.
Sure.
And so if someone wants to call you, we're going to flash that number up. We're going to give them that information. But before, will you tell us what you feel like is going to start happening? And if somebody's thinking about buying a house today, what cautions would you give them?
So yeah, so we're absolutely in an unprecedented time for sure. And we have seen some of the guidelines change from a couple months ago. A lot of it is around employment. So I think if somebody's starting to look for a house now, the conversations I'm having with them start with, how's your employment? Who do you work for? You know, is your job secure right now? And that's a really hard question. I mean, so many people who thought their jobs were absolutely secure have lost those jobs. So it's a really hard question, but I think it's the most important question to have. The last thing we want to do is get somebody started on a mortgage where if they're not sure if their job's going to continue for the next couple months, and then they find themselves in a mortgage that they can't pay.
Right.
Nobody wants to do that. So I think most important right now is, how's their income? Is it going to continue amongst this, you know, unprecedented time that we're in? Do they see themselves staying in their job, moving jobs, whatever the case may be? Because it's all about really the ability to repay. So I think that's an important question for folks to ask. The second question, I think, is, you know, look at your finances. If you're renting and you're paying $1,500-$1,600 a month and you're not creating any equity in a rental, then let's talk about, if you can afford that, how much of a mortgage can you afford? Where do you want to be? What are your financial goals in a couple of years? What's your family look like? I mean, I think we need to look at the whole picture. But right now, the absolutely the hot topic right now is employment and income continuation.
That's great. That's great advice. I want to say this too. When someone wants to contact you, how much time should they allot for a phone conversation, and what would you need from them?
Yeah, so I think, I mean, there's a couple stages to this. If somebody calls me, you know, if you have somebody that's interested in a house and you say, you know, you need to talk to John and get pre-qualified, I'm going to have the initial consultation with them on the phone, 15, 20 minutes. We're going to talk about what they're looking for, maybe do some pricing scenarios. And then once they decide they're ready to get pre-qualified, I send them an email. I have a couple different options. They can do a digital mortgage application, which is obviously preferable right now with everything that's going on. They can do it from the comfort of their home. When we're not in this situation, if they want to come by the office, they can come by my office, or I can take an application over the phone. That takes them maybe 15 or 20 minutes. And then I call them to go over it in detail. And that's when we talk about pricing and points and loan options and down payment options and comfort levels. And that conversation could be 20, 25 minutes. But I think it's important to take that time to create space to have all their questions answered and to explore the options that are available to them.
So it's unlike going into a meeting and having to spend a couple hours and rake through
Yeah.
paperwork. And there's an app that they can actually get, a guaranteed rate
Yeah.
app. And if we want to, we can give them the information on how to get in touch with you and download that, and they can actually apply online. So
Right.
that can get that started right away. And I think,
Right.
if people feel like they're in a healthy situation where they have, like you said, when they're paying $1,600 a month in apartments or, in a rental, they can definitely transfer that into something that could give them some real wealth over time, because equity
Right.
is more important. So,
Right.
all right, very quickly, interest rates are going all over the place. When should people really count? When should they refinance? Because you also do refinancing. We want to
Yes,
make sure that
absolutely.
people know if they want to refinance, is a good time. What are the rules for refinancing, and what should we look for in the next few months?
Yeah, great question. And you're right. I'm glad you prefaced it that way. Rates have been all over the place. We've seen some amazing things in the market. I mean, oil trading negative. I mean, things that just have never happened before. So if somebody has any inkling of refinancing, they should call a mortgage professional and let me just walk them through scenarios. I need to know what their rate is. I need to know, do they want to take cash out? Do they just want to remove their rate? Are they just trying to, or lower their rate? Are they just trying to reduce their monthly payments? So each situation is unique. So they should talk to somebody, get the information first so that they can make an educated decision on what the best way forward is. As for rates, as of right now at 9:22 a.m. on Thursday morning, we've seen some stability. There's been some information that's come to the market that we're starting to see purchases starting to stabilize. We're kind of getting through that first wave of the refi boom that we had about 4 to 6 weeks ago when rates really, really dropped. Nobody has that crystal ball. I certainly do not, but we're hoping that some of the stimulus packages that the government has put out are going to start to bring some stability to the market. I will say this past week has not been the roller coaster that it was maybe 2 weeks ago. There's been some little bit of ups and downs, which were common in the market, but not those significant swings that we saw several weeks ago where people were just scratching their heads going, what is going on?
Good.
So I think it's important to talk with somebody, especially with refinancing. If you find yourself where maybe you really think you can bring your rate down, or maybe you need some cash out to pay off some high interest credit cards or things of that nature, just talk to somebody, start the conversation, get some good information.
Fantastic. Well, it sounds like right now the most important thing people can do if they're thinking about this is give you a call. So we're going to give people that number. And of course, if you're thinking about selling your home, or if you're thinking about buying a home, I can also help you do that. So would love to be in partnership with you. I surround myself with great people. That's why it's important to make sure that you're connected to someone who can direct you in the way of great people who do great things. So thank you, Jon, for today and for all the
Thank you.
information that you've given us.
Yeah.
And again, if anybody has any questions, we'll put the information on how to get us on this recording today. And we hope everybody's staying safe and hopefully at home.
Stay safe and healthy and sane, folks.
Thank you.